Yeah, all right. We're getting the closing bells here in New York. An update here for the markets. And if you are the kind of person who pays attention to these technical levels, this is the day you definitely want to pay attention to. Closing above the 200-day moving average on the S&P 500, the Russell 2000 and the Dow Jones Industrial Average closing above that key Fibonacci level at 61.8%. So pretty much across the board, some enthusiasm here that can be found if you do buy into those signals. As far as the breakdown here, most of those big cap tech names, you know, the Microsofts of the world, Apple, Amazon, Facebook, they were either down or flat on the day. Most of the gains that we had in the market here really be coming from some of the financial names, JP Morgan, Bank of America, and the like. Some of those consumer staples names that Quincy mentioned a little bit earlier, like Hormel, Kraft, Kellogg, Hershey's, all up about 2, 3, 4% on the day, Scarlett. And then finally, I just want to mention, we had a lot of those middleweight names like Tractor Supply, Molson Coors, and GE also helping to lead us higher, Scarlett.
Yeah, wonderful spam were her exact words when it came to Hormel. We also are looking at the NASDAQ 100, which is turned around and is now closing up about 0.5%. So really interesting, Romaine, that you brought up that whole idea of the technical levels and closing above 3,000. As we bring back Prudential Financial Chief Market Strategist Quincy Krosby, Quincy, how much stock do you put into these kinds of technicals? Because for a second day, we got above 3,000, we got above that 200-day moving average. This time we managed to hold on and close above that. How do you read into that?
Well, it's almost as if everyone has become a technician, which then makes you wonder the validity. But nonetheless, when you can close above these resistance levels, because remember that 3,000 was resistance, and you can close above. And if we can add to this, what it suggests is that the market, the trajectory of the market is positive, at least for the short term. So that's something, and the reason why so many have been focused on whether or not the market could close above 3,000. And so, yeah, we all abide by this because it's been hugging it for so long. Every day it would get closer and closer, then consolidate. And then, you know, today just moved up. And by the way, the expectations were that it would be those big tech names that would actually mount the conquering of the 3,000 level and closing above it.
Yeah, and when we talk about those levels, Quincy, I mean, a lot of folks, I mean, we did close today on the S&P 500 at the highest since March 4th. A lot of people were looking to see us sort of retest those March levels before making a run back towards what some people think is going to be a run towards those highs that we saw back in February. But of course, Quincy, the flip side of all this are a lot of folks who sort of look at these valuations. You look at S&P 500 that's trading 25 times this year's earnings. You have a Russell 2000 that's trading like 70-something times 2020 earnings. And there's a concern here that you could see a pullback if we don't get some sort of, I guess, confirmation from corporate profitability and other fundamentals. Are you concerned that those types of metrics aren't going to necessarily match with what we're seeing in the price action over the last few days?
Well, yes. I mean, clearly, you're going to have profits are not going to be, shall I say, correlated to the market's move. So it's an issue of guidance. During the earnings season, one company after another just didn't even bother with any guidance. Apple was in that camp, and if they did had guidance, it was basically negative. If we begin to hear positive guidance, that is to say, they're seeing a little bit more of an opening towards, you know, from the consumer, from corporations. I think that can help the market. But as we all know, it is about therapeutics and it's about a vaccine. Take a look at when any company comes out, a biotech company comes out with a report on phase 1 or the beginning of phase 1 trials, the market actually, you know, just applauds. That is why it is so important that we can get through the summer without a second wave. And if we get through without a second wave, I think the market is going to see a quasi-normalcy sooner rather than later.